Everyone thinks buying a home right now is impossible. Everyone's complaining about the high rates. They're talking about the prices of homes haven't come down. We're going to make this very easy. I'm Jeana, and I'm going to take you on a journey home with Jeana. The goal here is to debunk, inform, and hopefully you walk away feeling inspired that you know it's not that complicated. And I've done this for a long time, and I've worked with all kinds of different clients, all kinds of different buyers, different loans, commercial, real estate, and I'm going to talk about finance, real estate, and building wealth on my channel. And I hope that this episode helps you. We're going to start from the beginning, and if it's not the right episode that you want to watch out for more, subscribe to my channel. But today we're going to just talk basics. And we're going to start with where do I begin? I am a lender, I'm a broker, and so I often get my clients from realtors. It seems like a lot of people start with a realtor, and that is fine. Realtors, a lot of people become realtors and they start asking their friends, and that is a great place to start. But I have to tell you honestly, start with your broker. Find a really good advisor that's going to be available for you at night, on weekends when you're looking at homes, that's going to look at you not as a client, that's going to look to you as a partner. Hopefully you're working with a broker because we have access to so many different investors and we have the lowest rates, period. But I really want you to know you can start anywhere. Start like Nike did, right? Just do it. You have to just do it. It's not complicated. I know the buying the home part is kind of emotional, but the part I work with isn't. It's black and white. There's no emotion in numbers. And I can help you. It's so easy. It's a lot more doable than you think. So, as we start, chapter 1 is all about affordability. Can I even afford a home? Well, are you working? Do you have income? It's okay, even if you're a seasonal worker or, maybe you work in a casino and you earn tips, you work in a restaurant. If you have income and it's stable. Now, ideally, we like to look at 2 years income. That's something that's kind of a standard guideline, if you will, for investors. However, if you've been a recent student or there's other workarounds, maybe you've been gone, you worked, we have a strong letter of explanation. You were helping your mom, she was sick, maybe you were sick. Don't worry about it. We can work on the income. The key is you need to have income. And so you have to have a job or income from the state. You have to be maybe a vet and have, income through the VA. But the key here, Social Security income, is income. And yes, we can look at all of it, and it's not that hard. Credit worthiness is another thing. You have to have established credit most of the time. However, I do have loans for people that don't have a Social Security. I have loans available for people with low credit scores. But this is the magic in what I do. Yes, the credit report is quite expensive right now. I don't have control over that. That's just what's happening. It's about $150. When I talk with you, I will either pull a hard pull and get into it if we know we need to do some credit repair. I also need to look at it and see what we need to pay off. Maybe there's things we need to get rid of that are lingering to improve your debt to income ratio. So I'm going to help you with credit. We'll get in there, and if I can do a soft pull, that's great. I can also do that. That runs about $80. But honestly, the credit isn't rocket science. And believe it or not, it's kind of weird, but the more, credit you have, meaning the more you've used on credit cards, ironically, your credit score kind of goes up. So I'm going to talk to you about that. We're going to figure out a formula. It can be done quickly, or maybe we don't need to even talk about credit. Maybe your credit score is just fine. One thing you should know is a lot of people say, well, I pulled it on Credit Karma. Absolutely. You can use the Credit Karma. I can work with that. Algorithms are a little different with the way we pull credit because you're buying a home and we're lending on hundreds of thousands of dollars. So my point system is going to be a little lower. Just know that. But credit is not crazy. It's easy to repair. And honestly, I've helped so many people get into homes. So don't worry about it. Credit does determine interest rate. And so if you have a little bit of a lower credit score, your interest rate's going to be a little higher because the investor deems you maybe the credit worthiness a little more risky. But that's not the end of the world. We can talk about that. So what is credit? And we just talked about income, so that's called debt to income. You know, our industry does acronyms, and so DTI is what we talk about. It's actually something we really, it's kind of important to our formula. But once again, I have programs. Some programs, if we're doing a down payment assistant program or something like that, they tend to be a little lower on the debt to income of allowability. But I have programs that go up really high on your debt to income. So that's something I can talk to you about. Don't get stuck on that. And so the next subject matter is obviously really important. Down payment, right? I hear this all the time. Oh my gosh, it's crazy. I have literally gotten people into homes with 0 down and 0 out of pocket. They need to have some money in the bank to cover the payment. Sometimes we need to see a couple months payments in the bank. We can also use gift funds for that. We can use gift funds to close. There are so many opportunities to get into a home. You don't need 20%. You don't need 10%. Now, if you're an investor, that's different. I'm talking first-time home buyers right now. I'm talking people that, you know, feel like they need to have a savings. You don't. And I can talk to you about those options. You know what? It's really simple. Affordability isn't that hard, and you can do it on a piece of paper with a pen. It's good to know your ballpark, you know, your income. Your debt to income ratio, that front number is based on your income and your monthly not utilities, not your cable bill, not that kind of thing. It's simple math. So it's your income minus a car payment, minus a credit card bill, you minus maybe student loans. And depending on the program, we use different ratios. So your student loan payment, any medical bill payment you have, anything like this comes off. That's your front end. And then we use the back end debt to income ratio, and we'll talk about that, and you'll hear a lot about this. That includes your housing expense. That's it. It's not even that hard. So I hope this first chapter, I mean, I kind of talked fast about it and I rambled through it, but I'm hoping that you see that things are super doable. It's actually not that hard to get into a home. And we have so many available programs that would blow your socks off. So I think just to start, where do I start? We start with a lender. You can talk to a realtor friend, talk to them to see who they're using. I highly encourage a broker. I have access to so many different opportunities, programs, and the lowest rates. The other thing is understanding your credit, right? Your income, that's simple. Variable income, tip income, steady income is important. Credit, not that hard. Debt to income, you learned. So that's chapter 1. I hope that brings a little light into, I don't know, ease into your day, and to understanding where we start. That's starting, and that's where it is. It's not that hard. And honestly, if you just want to talk about it, DM me. You can always look me up and go to my website. You can fill out a loan application. That's really where we really start. But a simple conversation, making sure you're confident with the lender you're using, that's a really good start.